with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we take a look ahead to expectations for the second quarter earnings season for S&P 500 companies. Now that we are 2/3 of the way through the second quarter and only about 1 month out from the corresponding earnings season, many investors are wondering if the earnings momentum seen in the first quarter will continue. Over the first 2 months of the second quarter, analysts have continually lowered earnings estimates for companies in the S&P 500. The second quarter earnings per share estimate has dropped 3.2% since the beginning of the calendar quarter on April 1st, to $26.55 from $27.45. Despite the decline, the second quarter is still poised to post the second highest earnings per share figure for the S&P 500, second only to the first quarter of 2013. During the past year, the average quarterly decline in earnings per share estimates during the first 2 months of the quarter has been about 3.6%. Thus, the decline in earnings per share estimate recorded during the first 2 months of the second quarter, although it's steep, is still lower than the trailing one-year average. Of course, a decline in earnings per share estimates leads to a decline in the expected growth for the quarter. Since the start of the second quarter, analysts have reduced earnings growth expectations to 3.4% from 6.9%. Every sector, with the exception of utilities, has seen expected earnings growth rates shrink since the beginning of the quarter. The biggest losers are materials and information technology, declining 13% and 7% respectively. Many of the declines in the sector estimates are due to negative guidance provided by corporations, which have forced analysts to ratchet down their expectations. Of the 108 companies that have issued guidance for the second quarter, 76 have been negative, 19 positive, and 13 are in line. Thus, 70% of the companies that have issued earnings per share guidance to date for the second quarter have issued negative guidance, producing a negative to positive ratio of 4. This is the highest negative to positive ratio for S&P 500 companies since the first quarter of 2001. The sectors with the largest numbers of companies providing negative guidance are information technology, consumer discretionary, and healthcare. Second quarter earnings season is still a month away and will kick off on July 8th when aluminum giant Alcoa reports results. I'm Christine Short, and thank you for tuning into this week's edition of the Lookout Report.